Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. All right, welcome everybody. I've got Quentin live with me today for some important mining insights and updates from our activist portfolio. Tavi has been in Bolivia this week. He's on his way back now, but he pre-recorded a session, so we'll have that too for some Tavi macro. So let's get started. I am really excited because Michael Burry is back. He's certainly one of my heroes in the investment world. As you know, I am I'm not just a long only investor. I like to have short positions as well, especially in our global macro and long short hedge funds, which have more than 20-year track record now and a pretty good downside capture ratio, meaning that in down markets, our fund actually outperforms. Those two funds outperform pretty nicely, and it's because I'm not afraid to short. I really do think there are a lot of overvalued stocks and overvalued large cap stocks today, especially the indices that the large cap indices that I think present some good short opportunities. So long only investors, don't despair, because there's plenty of great value and growth opportunities in the market as well. It's just not in the mega cap tech names or the large cap indices. So Michael Burry and Jim Chanos have been sounding alarms recently about aggressive accounting changes with respect to the useful lives of NVIDIA GPUs. These are likely having an effect with the hyperscalers where they are understating depreciation expense. And meanwhile, there's several major financial media outlets, including the Wall Street Journal, Bloomberg, the Financial Times, that are all picking up on this story as well, and really highlighting the circular deals among the AI hyperscalers and NVIDIA, who is their number one supplier. And these circular deals are reminiscent of the vendor financing excesses that we had in the 2000 internet and telecom bubble. Let's go on to the next. So this is a chart that Michael Burry has recently published both on X and on his new Substack. So what has he done? He's closed down his Scion hedge fund, at least to outside capital. Basically turned it into a family office. I think it's just his own money that he's managing. Maybe he's managing money for one or two other clients, but he's now below that SEC registration threshold. And anyway, so why is he unchained? Why have the chains come off? Well, in doing this, he can now talk. He can now write about his ideas. He can talk about them, and he doesn't have to worry about the compliance issues that his former compliance officer had warned him about. Basically, I think he had a bad compliance officer, if you ask me. But if you listen to his interview with Michael Lewis that came out just a few days ago, he says that his compliance officer basically forbid him from talking to the media at all. And now he can't. Now he can do that. Now he can have a newsletter, a Substack, and he can express his ideas. And I'm very grateful for that because I think this guy is one of the smartest investors out there. So this is his chart, his chart on the CapEx cycle that he's published recently, and what it shows is that let me just hone in here. Why don't you go back, Trevor, to that other one? So what the Burry chart shows here is that this is the CapEx of the S&P 500 going back to the tech boom in the 90s. And you can see that he's doing capital expenditures less depreciation. But what you can see is that the total CapEx for the S&P 500, this is the investment, the capital spending investment that's going on in aggregate. The CapEx spending peaks out after the stocks actually peak out. So we've talked about the CapEx boom and bust cycle and how that can be used to try to help time the business cycle and how to help time certain industries, especially. We were particularly successful with that in our funds in both the housing boom and bust as well as the oil shale revolution. We had a peak. We had a shale shale bust thesis going on, largely because of the CapEx unsustainability and the negative free cash flow associated with that in 2014 and 2015. And our global macro funds were two of the top performing, and long short funds were two of the top performing funds and among some of the top performing funds among hedge funds that year because of that short position that we had in the E&P and the shale oil stocks. We're actually long those stocks today, and Tavi's going to be talking a little bit about that later. But in the tech and telecom boom, it was the same phenomenon. The CapEx cycle peaked after the stocks peaked. The stocks peaked in March of 2000, but the CapEx spending continued, well after that. Same thing in the housing boom and bust. I mean, we were short home builders in the starting from 2000, the end of 2005, and we nailed it. That the home builders peaked in late 2005. Stocks peaked first. The banks came later, but you can see that CapEx in the housing boom. The spending continued even after the bust. Same thing with the oil shale revolution. And today, here we are again in a cycle that's comparable to the tech and telecom bubble, the TMT bubble of the early 2000s, based on the AI. Well, where have you guys heard that stuff first? Let's go on to the next. I hope that our listeners and our readers and investors will recall that this theory was really you heard it from us first. We had a letter called Asset Bubbles and Inflation a year ago where we started publishing some of the fundamental charts related to this CapEx boom and bust cycle as it compares to the 2000s and today. So that the chart you're looking at here is the top four hyperscalers CapEx Is that the chart you're showing, Trevor? I apologize. My video's messed up. Yeah, and what you can see is, is that it's the boom and bust theory of the CapEx cycle. Here, these are the top 4 hyperscalers today. They are Microsoft, Meta, Alphabet, and Amazon. Now there's more. There's OpenAI. There's Oracle now in the game. There's Anthropic. There's a bunch of others too, but these are the top 4. And what you can see here, just like Michael Burry showed, is you have this increasing CapEx spending trend among these companies, and their stock prices are still going up. So why is that? Why are so many people still so bullish on the mega cap tech stocks and the AI cycle here? They think that because CapEx is going to continue to go up, it's going to continue to drive the performance of the economy and these companies. But what they don't realize is the valuation aspect of it. Remember what Burry showed: stock prices peak first. Let's go on to the next. So what happened in the tech bubble of 2000, the internet and telecom bubble? Well, these were the top 4 hyperscalers of 2000: AT&T, SBC, WorldCom, and Quest. I mean, there were others too, like Global Crossing and many others. I mean, a lot of these companies went completely bankrupt in the tech bust. But what happened, as you can see in the red line here, these just like Michael Burry showed, the stocks, peaked out first at the end of 1999. These telecom stocks peaked out at the end of 1999 and very early 2000. But that CapEx spending continued for a whole another year before it peaked out. But look at how the reflexivity of the CapEx cycle works. It's a boom and it's a bust. So once it turns, it doesn't just flatten out, it unwinds. And look at the red line, which is the stock price performance of those companies. Again, a few of them went bankrupt, like WorldCom and Quest. Let's go on to the next. So this is the chart that I just put out as part of our most recent investor letter. I encourage you to go check out that letter. And so what are we showing here? This is NVIDIA relative to those top 3 internet hardware vendors of 2000. And, in comparisons with the tech mania of March 2000, when Cisco Systems held the world's largest market capitalization, are warranted. NVIDIA's recent enterprise value reached almost 3 times that of Cisco's when normalized for GDP. Indeed, as of October 29th, as of October 29th, when I ran this chart, NVIDIA's enterprise value relative to GDP was 36% higher than the enterprise value to GDP of the 3 biggest internet hardware leaders of 2000 combined: Cisco, Intel, and Sun Microsystems. Okay, now look at this chart. We're looking at Intel, Cisco, and Sun Microsystems in the 2000s. So it's pulled forward 25.6 years in order to compare it to NVIDIA today. And you can see that NVIDIA today is 36% higher enterprise value, market cap, plus net cash, or minus or plus net debt, enterprise value relative to GDP. So this is the valuation comparison. Why, and from a valuation standpoint, just one aspect. We've shown many other valuation charts that show why today's large cap stocks, and especially the mega cap techs, are it's one of the biggest valuation bubbles that we've ever seen. So as NVIDIA, along with the rest of the Magnificent Seven, the NASDAQ 100 and the S&P 500, already peaked for the current business cycle? It's a question. It's a bold proposition, but it's certainly possible, in my view, on October 29th of this year, that date may well mark the turning point, because so far that's the peak of NVIDIA and of the S&P and of the NASDAQ 100. I mean, everyone's all psyched that the Fed's going to cut rates next week, but is that already priced into the market? What's going to happen next week? Are we going to have a sell the news kind of event? I don't know, but the valuations and the unsustainability of the capex, as all the media is highlighting with the circular deals and the accounting gimmickry that's going on, and the disappointment in NVIDIA's free cash flow, and the disappointment in NVIDIA's cash flow from operations and free cash flow on their November 19th earnings release just a few weeks ago, that may well have sealed the deal from a fundamental standpoint that this could be the peak. Let's go on to the next. So here's Bloomberg from today, a chart that Bloomberg put out today, and they're NVIDIA. Everyone thinks it's a monopoly that's going to dominate, and it's had near monopoly pricing power to date. But it's now facing serious competition, not just from advanced micro devices and Intel, Broadcom, Samsung, and Huawei, and other Silicon Valley upstarts, but also from its own largest customers who've been developing their own AI inferencing chips, TPUs they call them, tensor processing units. These are ASICs, application-specific semiconductors that are specifically designed for AI inferencing. So, to date, everyone's had to go to NVIDIA GPUs because they're these general purpose, brute force number crunching machines that can do generalized computing for AI. But now we have a lot of competition, not just from other companies that make GPUs, but now these ASICs and tensor processing units, including from NVIDIA's own biggest customers. So, that's Google, who's doing a deal to sell chips to Meta right now. That's Amazon, who just rolled out a new version of their TPU chips to Microsoft, and Elon Musk is developing his own chips as well. So all of the hyperscalers are developing their own chips. Let's go on to the next. So Crescat's funds. We finished a strong November and a strong year to date. And so we are, in the process of now closing up the last month of the year. The Preqin hedge fund database has us as 5 of the top 15 performing hedge funds through October. Through October. And we were down in October across our funds. We've come back strong in November. So these Preqin ranks are still as of the end of October. They're pending for November. We were up across the board. I think we're going to be doing even better in these rankings when we see the November numbers. What is it? But why especially? Well, because a lot of those the hedge funds that were ahead of us year to date, when the top 5 or the top 10 through October, most of those funds were crypto related funds, and look what's been happening to crypto in the past several weeks, including last month. So I think you're going to see Crescat rising in these rankings when they're published for November. So why did I say value and growth investors don't despair, even though I'm kind of a bear right now for large cap stocks? It's because there are a lot of other things to buy. Let's go on to my final slide. This is Crescat's Precious Metals Fund. It's our precious and critical metals mining fund. And we have a number of investments in gold and silver, copper and zinc and other critical metals mining, exploration focused heavy mining companies. We have big producing companies too. And we have development stories too. We can invest all across the long curve, across the Lassonde curve, excuse me, but we do have a heavy tilt towards exploration. And that's thanks to Quentin Henney, who's here with us today. And he's an exploration geologist, 40 plus years of experience. And we've been really fortunate to be able to tap into his expertise. So this is really, I think, only the first year that you've seen the exploration, the smaller cap exploration stocks will really start to outperform and to perform well. Yes, the GDX and the large cap mining stocks that are in the Philadelphia Silver and Gold Index, which is our benchmark, they're doing extremely well year to date, and they started to move, last year. And so, but how has our fund been performing compared to all of those benchmarks? Philadelphia Gold and Silver, the Van Eck GDX, the GDXJ. Since inception of our fund, this is showing since inception 5+ years ago, we're beating the pants off of all of them. I really think it's still extremely early, however, in the cycle for commodities, for real assets, for inflation hedge assets. I believe we're ahead of the curve, and we have this counter-cyclical, counter-capex cycle to the mega cap that I just showed you going on with the whole mining industry. And we've shown the many parallels before to why we can have strong outperformance even as we go into a bear market for large cap stocks like we did, and large cap tech stocks like we did in the early 2000s, like we did in 1973, 74. We can have a counter-cyclical bull phase for mining stocks and really high growth starting from very low valuations. I think that's where we are today. That's why this activist precious metals portfolio is our largest long theme across all of our funds at Crescat today. So that's going to be it for me. Tavi's got a short segment, and then we're going to get on to Quentin live. So let's roll, Tavi.
Hi, hello everyone. I'm speaking from the airport of Panama City, and trip to Bolivia to learn more about what's been happening there. Especially, of course, we've got the San Cristobal mine, of which I annually always try to see. But on top of that, I would say that there's always excitement of what's been happening with the country in regards to specifically the changes that we're seeing politically. There's opportunities in many pillars of the economy right now, particularly in some sectors. But I was just amazed by the speed of the changes that we're experiencing in a country that has been essentially left behind, and not only that, but also has been suffering from some issues politically that have not allowed the country to be unleashed from a macro standpoint. And I think that's exciting to see those changes occurring. It's exciting to also hear from government officials and see how savvy, market savvy they are when it comes to the agenda and what they're trying to accomplish. And I was very, very impressed. Very impressed. I wish we had this in Brazil, but I was. I think we're about to experience some very significant positive changes in the country. I think that the biggest change ahead of us is likely to be on the GDP growth, but particularly from a per capita standpoint. And it's going to have an impact in everything we can think of in any part of the economy, from real estate to particularly you can think of logistics, energy, mining. It's one of the countries that have been mostly unexplored in the world. And for those who don't remember, Potosi was responsible for most of the silver mine back in the 1600s or so for the Spaniards, and basically financed their entire operation in South America, los conquistadores. And so, anyways, things, and it's a remarkable place with a lot of great people. Uh, Very lovely experience to be able to see that, from my own experience. But we're here to also talk about markets, and my apologies. It's been a busy week. Been very busy week, but and I was stuck a little bit on the airport, and so I had a few issues that I had to run through. But I was able to work on a few charts that I think are probably, in my view, and I'm always looking for what's the most important. Every time I wake up and look at the markets, my first view is always, what's the most important thing happening right now. And you know, when you present these things every week, it's always an exercise of what are the most important things happening this week. And I can't happen but build on a thesis that I've been talking about for some time now, which is the energy space. And energy companies have been presenting a lot of resilience recently, particularly if you look at the XOP ETF, which is, very broad exposure to gas, oil. And see that, recently we've been potentially at the beginning of a very significant. And there's a few charts here that call my attention here for this, because to me, this is one of the commodities that have really lagged relative to others. And it's not usual to see that, and very unlikely to be the case in my view. And most of the political risk or geopolitical risk that it's supposed to be part of the oil price, in my view, has been very priced when it comes to the potential for things to also develop worldwide when it comes to conflicts. And energy stocks are also playing a role when it comes to what's happening with AI, what's happening with onshoring, what's happening with bringing manufacturing back to the U.S. and other Western societies are looking to, reduce reliability with authoritarian regimes like China and others. And so it is very interesting that this particular ETF is starting to behave very well. And you can pick and choose a few other individual names that have been, kind of leading the pack here. But the ETF as a whole has been doing quite well. If you look at energy stocks globally, you're also seeing a similar trend. But what's most important here is also the resilience, as I mentioned before, of the energy stocks, but also relative to oil, right? I mean, if you look at oil prices, that has not been behaving quite well. Actually, it's been behaving terribly. Now trading at about $60 a barrel. And it seems like a very frustrating sort of trade. For those that think that this is related to, we look at the energy chart. I don't think it's quite there. I think that the reason is another, but I also think that oil looks, like potentially a very compelling macro opportunity as well. And so this is why I'm presenting this. And usually when you have these periods where energy stocks tend to perform better than oil, actually mark periods as well of bull markets for energy as a whole, not just energy equities, but also the commodity. And this is probably the most important chart I posted recently, right? And I think I might have used in this presentation. It's okay to show it again, because I actually think it's one of the most important charts that you must. We've had first panel gold miners break out. I mean, we had a period of consolidation from the early 2020s all the way to 2024 or so, and then we saw this breakout recently here for the last 12, not call it 16 months or so, 20 months. And then copper miners in this panel did quite a similar pattern, right? I mean, we saw some consolidation, a little bit steeper, or I should say a little more volatile, but then the steep breakout as well. And then lastly, you saw the energy equities here in the last panel, where the consolidation has happened, but we haven't seen that steep upward movement on it, which I think is the opportunity. When you look at oil prices relative to money supply, which is one way to look at commodities overall, historically speaking, we're probably at one of the most cheapest levels in history in this metric. We've seen periods when it was expensive back during the global financial crisis. And this is a big difference from the housing bubble environment we saw. We clearly are in a bubble when it comes to equity markets in the U.S. But it's different than '08, right? Because '08, we did see oil being very expensive. This time we actually have more of a similar scenario to where we saw back in the early 2000s when the tech bubble was also showing issues, or the tech sector was also showing issues of frothiness. But when you look at the oil space, was actually quite cheap, which is similar to now. So I think, my view, strategically speaking, oil right now as a commodity, if you look at the realm of commodities and hard assets, it's probably one of the cheapest commodities out there, if not the cheapest at this moment. So I'm paying very close attention to this. Another commodity that plays a role in a more, should say, more cyclical way, but is losing its cyclicality recently, just because of the needs for building AI infrastructure, build data centers, revamp utility companies, and all the electricity infrastructure we have in the U.S. and other countries. Copper is rather the core of that, but yes, we've seen a lot of breakouts recently in some other metals, but to me, copper is on the brink of a really, really big move. Once you break out to those levels, you tend to get into a sort of a price discovery phase, and that price discovery phase tends to be very explosive usually. That's a period where there's not a lot of resistance, and therefore called the price discovery moment, where the price of that asset when we hit a trip. If anybody recall back when we are hitting at about $2,000 an ounce, and then we added, pretty much double the price after that, right? So it wouldn't shock me to see, double the price of copper in 20 months from now, or something along those lines, because I do think there's a potential for that from a supply constraint aspect, but also from a demand side as well. And now technically looking at a perfect moment for that breakout to occur. When I look at the capex that is driving the whole situation, you can see clearly in this chart the large cap tech sector is basically driving the entire capex cycle so far. Now, I did hear Vasson talking about this and others. I do think the mid cap environment is also going to drive this as well in the future. And so pay attention to this because it might transition a little more. But basically, we're seeing a large amount of capital being spent by the large cap tech companies. And that money is coming into other parts of the economy, such as commodities, in my view. Miners. This is one important chart I wanted to talk about. Gold miners have, capex, and who would have thought that we would see gold prices of 4,200, silver prices approaching $60 an ounce, and then the capex for these miners are still 86% lower than their prior peak level when you adjust for gold prices. And so, when you don't adjust for gold prices, you're down about 50% from peak levels. So this is a remarkable chart that shows you, in my view, one of the biggest signs of a bubble in the gold mining space is when miners begin to spend like drunken sailors, right? I mean, that's what we saw in every cycle in the past. At the very peak of the cycle, you tend to see these spending that gets out of control, and on top of valuation being very expensive. This is not what we're seeing right now. Clearly in this chart, we need to see more in order to cause gold prices and silver prices to fall and cause supply to rise with the spending as well. But we're not seeing that. It's challenging to find metals. It's challenging to. Are still very reluctant to spend capital, which is. I think this is one of the most important cycles for mining that we've seen in history, and it's probably going to be one of the longest in history, if you ask me. Another way of seeing the beginning of this cycle as well is just looking at the miners relative to gold itself, and we've been doing higher lows, recently, right? All the way back to 2015, 2020, 2023, 2024. And now we broke out from a very significant resistance. And now I think we're off to the races here, and potentially going to be seeing gold miners really play the leverage that they usually have as a business, which leverage plays both ways, bad and good way. But I'm about to see the good side of that. Silver also breaking out recently, doing very well, and it's important to put into perspective. Is this the beginning, the end? To me, it's still got a long runs ahead of us here, and especially when you look at silver relative to inflation. But this metric that we're looking at, CPI, is not a perfect metric for inflation itself. It's in our view is at least a very conservative metric to what real inflation is running in globally. And so, if you think that we're looking cheap from a CPI adjustment standpoint, imagine on real inflation, which I think it's twice what this is. And so, we're still, long ways from prior highs when it comes to this type of metric. And I think it's a very important metric to look at as we monitor what's happening in the precious metals industry. My last chart in this presentation, two last charts, is a very good macro kind of step back chart, right? It's a 10-year rolling change of the gold to S&P 500 ratio long-term cycle. So basically what happens is you have periods where gold outperforms the S&P 500. There are periods when the S&P 500 outperforms gold. And people try to kind of think about these things as if it's one trend the entire time, and it's not. I believe that there's. I don't believe. I look at the data. I mean, you're looking at right in front of it. There's cyclicality to this ratio as well, and especially when you step back on a 10-year horizon. 1940s, a period of a lot of debt in the government, and what happened was that gold actually outperformed the S&P 500, mostly caused by the S&P not doing very well. 1970s, not a period of a lot of debt, but a period of inflation, a period of the end of the gold standard, a period of the beginning of a lack of disciplinary approach from governments overall, globally speaking. And what do you have? You have a gold cycle driven by both sides of that, where the S&P didn't do very well, but gold did extremely well. Then you have the early 2000s. This was a bubble environment. The debt wasn't so much of an issue. There was not much of inflation. There was not much of a central bank buying spree happening. And so that cycle wasn't as pronounced as you can see here. I think this cycle was the prior ones because of the imbalances we have. The debt is a lot worse. The situation of the Fed having to cut rates at all costs is even more severe than we've seen in the past. We've got deglobalization that resembles the periods like we saw in the 40s, for instance. I think we have inflation that is similar to the 70s, inflation that is sort of really infiltrating the economy in a way that people are ignoring, but it's extremely important. So I think that this is a period that you don't want to be, thinking that what we've seen this year so far with, the S&P in gold terms actually having its worst year since '08, with the S&P actually going up, right? I mean, it's all about, gold actually, to use gold as real inflation, it's actually eroding the performance of the S&P 500 in real terms, just because of how much inflation is running in the country. And so when you think about in those aspects, a lot of people tend to maybe consider that the outperformance of gold it's not something that will be long lived. Not my view. I think this is a long-term sort of pattern as presented in this chart, and potentially just the beginning of that trend occurring again. Last thing I want to talk about is this chart. I always like to acknowledge assets that are cheap, some fundamental reason. Of course, we're looking at short interest of a TLT ETF, the Treasury bond. It's a longer duration bond. I've been saying not only internally but also recently that I do think there's a significant opportunity here, betting that the 10-year and the 30-year yields are going to fall. I've been of the view that yields are going to fall altogether. I'm starting to be willing to take more risk and go longer duration, that we're going to see a decline on that front as well. So I do think this is a very critical macro development, as well as we see the suppression of rates, the financial repression happening worldwide, but really in the US. I think this is going to manifest itself in this bullishness on the blue line, which is also at a very record short interest measurements or metric as well, which tends to be or set the stage for a very bullish environment for this asset class overall. All right, I gotta catch another flight, believe it or not. I want to thank everybody for watching, and I think Quentin is going to be doing the next segment. Thank you very much.
All right. Trevor, I've got a bit of an issue. For some reason, StreamYard is not behaving itself. It might be because of my location. I don't know. But basically, I'm having to use my telephone to look at the images. And there's a bit of a lag. So I'm going to apologize if this is a bit glitchy. But what I'm going to do is take you through, like I did a couple of weeks ago, take you through a little tour of a project that San Cristobal has acquired in Ireland. We acquired this late last year. We bought an interest in the Galmoy mine in Ireland. Galmoy is a historic zinc producer. It's a very famous mine. It was the highest grade zinc mine in Ireland. Ireland, most people don't know, is a mining jurisdiction. It's actually quite famous mining jurisdiction. And mainly for zinc. You know, there's some other metals, there's silver, there's lead, but zinc is the biggie. And it turns out that on a per square kilometer basis, Ireland has more zinc than any country. Okay, like if you take the amount of zinc that's endowed here in Ireland, you divide it by the square kilometers across which, you know, the zinc is distributed. This has the highest endowment of zinc on a per square kilometer basis of any place on earth, which is really interesting. It's very interesting. Okay, so we entered Galmoy on the premise that we could do big things here. It's just like Bolivia. When we started working in Bolivia, we had a mine that had a very short sulfide mine life. It only had 5 years reserves left. It had some other, you know, signs of projects that could be developed, but it's taken a lot of work there to bring everything up to speed. All right, now we've added lots of sulfide reserves at San Cristobal at this point. We now have a future that takes us out into the late 2030s. In fact, as we drill more, I wouldn't be surprised if we see a sulfide mine life going out into maybe even the 2050 range, something like that. Okay, so that's a huge step. It's all done through hard work, through exploration, and dedication. Really spending money on an asset that many people didn't think had so much potential. We're developing our oxide project in Bolivia as well. That's going to be started next year. It's one of the biggest silver projects in the world. It's actually the single biggest silver oxide project in the world. And then we also have a new discovery, which we're quite proud of there, that looks like it's shaping up to be a massive silver discovery as well. So what am I saying? You look for districts, you look for places on Earth where there's a lot of metal. You acquire a strategic position in that area, and you start to explore. Okay, let's go through these slides. Let's just take a little bit of a tour here. Again, I got to apologize because there's a bit of a lag, but go to the next slide. and Trevor, because I'm dealing with a lag, I'm just going to assume that you're moving the slides forward, and I'll talk to these one by one. This is Kilkenny. It's the city nearest Galmoy. This is just a few kilometers south of the Galmoy operation. Absolutely delightful little town. Anybody that's been to Ireland knows Kilkenny is a very historic Irish community. I should call it a city. It's actually that size. It's pretty big. And it's really kind of the heartbeat of this particular region. There's a very famous zinc mine that was here a few years ago called Lachine. It was one of the biggest zinc mines in the world. It was mined out about 10 years ago. It's been reclaimed since, but there's a lot of people in this region that remember the history of mining and what it did for the economy around Kilkenny, and we're proud to really reinvigorate mining here. It's a new day in Ireland in every respect. Let's go to the next slide. Okay, again, because of the lag, I'm just going to assume we're on the next slide here. Apologize. I'm going to run you through a little bit of geology. This is the Rathdowney Trend. This arcuate belt that you see here kind of crisscrosses the southern half of Ireland. It extends kind of in a northeast direction where we're located, which is inside that purple circle. And it extends all the way back up to Dublin. In fact, the biggest endowment of zinc in a deposit is up at the Navan area, or often called Tara, the Tara mine that's near Dublin. But right here in the heart of the Rathdowney Trend around Kilkenny, we have the Lachine deposit, quite famous. We have Galmoy, which in this case is shown as a blue dot there. And we also have an investment in our neighboring company that owns the Rapla project. Okay, why do we have this strategic position? Because this is a hugely endowed district. We've worked hard to kind of consolidate, conglomerate, if you will, a land position here. And so in the case of Rapla, it's a strategic share position in the company. We're funding exploration here. We've got drills working all over at this point. We've got a couple drills working at Galmoy itself. We also have a couple drills working up at Rapla. What do we intend to find? Well, I want to find the next Lachine or even the next Navan deposit. Okay, and I think we're in the right neighborhood. So we're doing the hard work that we need to, but at the same time, we're opening the mine too, and I'll talk more about that as well. Let's go to the next slide. Okay, so a little bit about the geology of Irish deposits. They're not SEDEX, meaning exhalo deposits per se, but they closely resemble that. And if you look at this image, you can see kind of a schematic cross-sectional view of these deposits. They tend to cluster in certain stratigraphic positions within the layers of rock that underlie the central part of Ireland. There's a particular contact between this Walsortian formation. It's that subunit, the purple, and the Walsortian reef above. There's a particular break that tends to host the biggest deposits here, and that includes Lachine, Rapla, and Galmoy, which are all represented on this image. And those structures, those faults that are coming up, are actually feeder zones for these mineralized bodies. Now, you might say, well, did these things form on the seafloor? Did they exhale out onto the seafloor? Not quite. Okay, the sedimentary rocks were actually deposited, and then the faulting occurred, or we'll say moved, and it allowed hot fluids to come up. And because of the porosity, the permeability of the rocks here, it basically, the fluids found that particular unit and they spread out along it, and they form these very blanket-like deposits that can be quite extensive. Now, the best ore is typically found around the feeder, the fault zones, but the lenses can extend out for quite some distance. Okay, so let's look at another image. Let's go to the next slide. Again, apologies about the lag. There's nothing I can do about it, but anyway. All right, so this image shows you the Lachine deposit. It's a footprint of the deposits at Lachine. It's not just one deposit, by the way. Lachine is comprised of a whole series of pods. Notice that in this image, which is a plan view, on the left-hand side, there's a structural zone, kind of northeast trending, and then there's these gray blobs that come off. Those are the sheet-like ore bodies. They're big lenses of sulfides, in particular zinc, lead, and often silver sulfides that occur and extend out from the feeder zone, which is the fault. Okay, and if you get a sense of the scale here, these things occur over a couple square kilometers or several square kilometers in this area, but they're not all together. Okay, so the key here is that once you find one pod, if you kind of understand one pod, you got to also then start thinking, well, where's the next one? Where's the next one? Okay, and that's the logic that has to be applied in this area. To find the next deposit, you actually have to start thinking about the periodicity of these deposits, how they're spaced along the fault zone, and simply drill. I mean, that's it, pure and simple. You got to drill to find these. Now, we are to the northeast of Lachine. So basically, that fault zone that you see there kind of carries on. It trends up the entire Rathdowney Trend, more or less. And we are the next, you know, car in the train, so to speak. We're basically the next um, area in which these pods occur. And then Rapala is the next one yet further up to the northeast. This was a great mine when it was in operation. 22 million tons, a little over 10% zinc. Fantastic mine. It's one of the biggest zinc mines in the world in its heyday. It's totally reclaimed at this point. What do we want to find? We want to find that right there. I think we have a very good shot of finding, a Lachine scale endowment of zinc on the Galmoy and Rappel properties. Go to the next slide, please. Okay, so um, what sorry about the lag. I don't know why this lag is happening. What we're doing at Galmoy is twofold. Firstly, we are reopening the historic mine. Okay, and there is infrastructure on site. This aerial image here shows you we do have some residual infrastructure, like the stockpile dome, which is shown there. It looks like a big teepee. We have some old water tanks. One of the one in the back is a historic water treatment tank. We actually built a new one here recently, and you can see there's office buildings and stuff scattered around the property as well. So there was infrastructure here, but we're making it great again. We're basically coming in and we're going to resurrect this mine. All right, so let's look at a few images here. Go to the next slide. By the way, all of the area around this, it's farm fields. It's flat but pristine farm country, and people ask, well, how do you get along with the local farmers and stuff? Absolutely fantastic. When we applied for a permit and stuff, we got approvals. There was no resistance to this. Everybody remembers Lachine. They know that the team that we have here operating this is the ex-Lachine operational team. They are fantastic folks. They have a great reputation, and we have zero resistance whatsoever. It's a delight to work in this part of the world. Anyway, this image shows you the new treatment tank, which is on the left, the old one on the right, stockpile domes way over there on the far left. And this part of the site is where we're going to put the ore sorting. Now, you say, well, what's the plan here? Are you going to have a mill? No, we aren't. Okay, we're actually going to open up this mine. We're going to bring the ore to surface and crush it and then sort it with mechanical sorters. This is kind of a unique operation in that regard. We're not going to have a big flotation mill or something like that. We're not going to have huge amounts of tailings, things like that. So we're going to operate this as a mechanical sorting operation where we upgrade the ore grade up to the mid-20% level of zinc, and then we ship the ore. We're going to actually ship it by containers over to a company in Poland that has a plant and a smelter. Okay, they're called Bolesław. So we have an agreement with Bolesław to sell our product to them, and it actually makes for a very interesting situation because the capital to get this started is in the low 40s millions of dollars. So this is a very low capex project. Because we're keeping it direct ship rather than building our own mill or something like that, this is actually a very robust project in terms of economics. We anticipate producing a pound of zinc for, say, on the order of 70 cents. That's pretty darn good. Okay. Now, earlier I mentioned that exploration is a big part of our thesis here. Notice the red arrow there. That's a drill rig. We are already drilling out here. We got 2 rigs operating right now, and they are absolutely hitting on all cylinders. Okay, and they are drilling areas, and I'll talk a bit more about it here in a second. But they're drilling areas that are, interpreted to be potential extensions of the ore bodies, or some in some cases even new ore bodies that underlie the surface here. All right, let's move forward. While we're doing that, or while I'm waiting for the lag, interestingly, the water treatment is now nearing completion. We're going to have that completed and start dewatering by maybe early to mid January. Okay, so we're well on track to be in production. Now, this map, this is a plan view of the old Galmoy mine. Basically, shows you the footprint of the ore bodies here. There were two large, relatively flat ore bodies that you can see here they kind of look like big handprints or something like that. But then you can see there's some long sinuous ones, like that one that takes off to the northwest there, to the upper left. That's the K zone, and that was a skinny but very almost like a river channel, a very tightly constrained ore body that follows some fractures in the ground. Absolutely phenomenal grades. Okay, the grade of this deposit was stupendous. It was often in the 20+% range of zinc. I think that's one of the reasons Galmoy was such a success back in the day. But what's really interesting is the fall in zinc prices in the mid 2000 teens is what led to its demise. Okay, so there were several owners of Galmoy, and the last significant owner was Lachine, or sorry, the Lundin family, Lundin Mining, and they mined this. They actually picked it up in the late 2000s. It was kind of right. I think it was right before the GFC. They did well for a while. Zinc prices were rising, but then the GFC knocked zinc prices way back. Okay, and they simply didn't recover after the GFC very quickly. Zinc prices remained a bit soft, and because of that, it was a struggle. So they had a great ore body in terms of grade, but they had a challenge with the zinc price. So even in spite of the phenomenal grades here, they struggled. They had to basically cherry pick the highest grade material, and they often left a lot of ore behind. Okay, so there's a lot of remnants left that we're going to mine. And when I say they're high grade, even the remnants are running 10-15% zinc. So this is, in every respect, this is still a very high grade deposit. But we have a lot of low hanging fruit. So go to the next slide, and we're going to look at an area here a little bit closer up. Okay, so I'm gonna zoom in on these workings that you see here, and we're going to take a look at what they actually look like, texturally, what they look like underground. Okay, so you can see that these things kind of resemble a slice of Swiss cheese. If you look at the lower left and upper right there, you can see the footprints of these things, and where there's these little round things, those are the pillars that were left behind. Yeah, there's a lot of pillars that we can grab. They're basically towers of rock that are supporting the ground above. The areas that are green are backfilled. Okay, they put rock back in to help hold the roof up. That's not prospective, but the pillars are certainly available. But around the ore bodies here, there are extensions that we're finding that go out quite some ways. And quite frankly, I think we're going to see a huge expansion based on the drilling that I observed today. So we're going to mine both the pillars and then areas around these footprints that you see here, where they simply left a lot of ore. How much do we have right now? We have about 3.5 million tons of, say, 12% zinc in reserve. How much might there be? Look, I wouldn't be surprised if we can find 2 or 3x that in a very short time with the work we're doing. We're giving it heck. Okay, we're going to find a multi-year mine here, and it does produce about 50,000 tons of zinc metal per year. So it's not an insignificant mine with our current mine plan. All right, let's go to the next slide. So, one of the things that geologists, engineers have to spend a lot of time doing is having meetings because you have to get everybody on the same page. You got people in this room. This is our team from both San Cristobal, but also the guys from Chinoon, which is the local Irish company here. And we all have to contribute. Like we have expertise in every single facet of mining in here. We got engineers, geologists, accountants, lawyers. I mean, everybody. Okay, and we go through this meticulously to make sure the plans are laid out, and that all this money that we're putting in, this 42 million or so that we're going to invest in this operation, leads to a successful outcome. I'm very proud of the team we have. They're absolutely fantastic people to work with, and it's been just an extraordinary amount of fun having both the Bolivian operations as well as the ones in Ireland here. All right, let's go to the next slide. By the way, the office building here was built in the 1980s. It kind of has that 1980s feel to it, but they've done a great job remodeling it. When we first acquired this back in December last year, it was pretty ragtag. It was pretty rough, but we had a budget to fix up the office. Now it's looking a lot better than it was. But anyway, this is an image looking over the mine site, the development site. You can see we have a lot of heavy equipment going in place. This is actually the area where the ore sorting is going to take place right in front of us here. You can see the TP off on the left. Basically, it's a panoramic shot. It was absolutely pouring rain all day today. When I took this photo, it was blowing absolutely sideways and very cold. But they basically, it's winter, Irish winter is what they tell me. So typical. All right, let's go to the next slide. By the way, we'll have this entire thing ready for production and basically back in operation in roughly July next year. We start July or August. We should start seeing ore. I would say by end of next year we'll be in full production, something like that. All right. So this image just shows you the aerial view of that site. We are going to do mechanical sorting. It's the most unusual mine or plan for a mine that anybody's seen in Ireland. Everybody expected a mill, something like this. Nope, we're not doing a mill. We're doing mechanical sorting. It means we won't have mill tailings, and the whole capex is quite low. Let's go to the next slide. Not sure I got duplicates in there, but sorry about that. Anyway, all right. So the TP itself dates back to the mid-1980s. We have to re-engineer that, and we're basically going in there and re-welding the framework to keep the thing from, stabilize it, I guess. This thing is where the ores are going to be hosted or housed. Obviously, the weather here is very wet. You don't want a lot of moisture coming in contact with the sulfide ores, or they tend to degrade the ores. Right, so we're going to stockpile them in here, and we actually are going to put our crushers and so forth in here. One of the steps to do mechanical sorting is to have crushers that take the rock down to a relatively uniform size, so that they can be mechanically sorted. And we're going to do all of that inside the dome here. All right, go to the next slide. If you recall the dome that I showed you at San Cristobal's round, it's a giant round dome. Here they like teepees. All right, so what are we looking at here? Out there in that brown dirt patch, that's actually the first work to reopen the decline. So there's basically inside that pit, it's kind of hard to see over the brown there, sorry, but there's going to be a ramp that goes down into the ground, leads all the way down to the mine workings. They're starting to excavate that back out. That was the original ramp. So they're basically going to re-exhume the historic ramp that accessed the mine workings. The mine workings are anywhere from about 50 to maybe 150 meters below surface. That sounds deep. It's really not very deep. In fact, this is quite shallow. So the ore system itself is very shallow with respect to many deposits across Ireland. All right, let's carry on. Let's go forward. Again, look, things like groundwater, we got to dewater. The historic mine has a lot of water. And so the first step is going to be pumping out all that water and treating it, so that it can be released into the natural water system. While I was here, we had a huge number of trucks show up. It was very exciting because this is a lot of the equipment they need to complete the water treatment plant. Basically, everything, all the equipment that is required showed up about 1 o'clock this afternoon, and a lot of the crew had to go out and actually help guide where this equipment went and unload for them. So it was an opportune time. This stuff came all the way from Turkey. Basically, everything all the water treatment equipment was constructed in Turkey and brought up, in this case, by truck. Some was by ship, but kind of amazing. Europe is kind of a little microcosm of various industries that can build stuff like this. Turkey, they tend to do a lot of metalworking. Okay, let's go to the next slide. So one of the things we need to do the mechanical sorting is a crusher. Okay, and what you're seeing here are there's actually two machines here. They're kind of one behind the other. These are crushers that take the rock down. So they basically take large pieces, knock it down to smaller pieces, and then there's other equipment that like screen decks and stuff that kind of sort out the rock, and anything that's too big goes back through and recirculates until it's all about the same size. You want particles of rock that are roughly the same size, and then these will be installed inside the dome. Okay, so that's where we're going to do the crushing. And then the mechanical sorters are going to be outside. There's going to be a whole separate facility for mechanical sorting. But this is a lot of equipment, a lot of dollars. There's a few $1 million sitting right there in plain sight. $42 million total build. Of that, maybe half of it is actually dollars spent on equipment, and including the water treatment plant that I showed you, these crushers, the ore sorters, the mechanical sorters. I think arrive in January. A lot of money being spent right now. By the end of January, we will have spent roughly half of the capex, and by late July next year, we'll have spent the whole 42 million. But is that a big sum of money? Yeah, it's a big sum of money. But in light of the money that San Cristobal's making right now, it's a drop in the bucket. I got to say we've been very, very fortunate. Let's go to the next slide. By the way, we brought in the Irish Strategic Investment Fund to co-invest with us recently, which is a big step. It's really the first time the ISIF is what they call it. ISIF has invested in a mining project, and so there's a lot of people watching this. Everybody in Ireland wants to see this thing be successful, and now they put their money where the mouth is, and put some money up to help capitalize it. So, we've been working with ISIF now for about 6 months. Delightful people. They're really, really intent on seeing success here in Ireland, and putting the capital to work that their own, government employees basically rely on for pensions. That's very interesting. All right, here you can see a laboratory. We actually built our own analytic laboratory at the facility. We're going to analyze our samples daily. Basically, this is where we do grade control. We can determine, what the grade of the ore is coming out of the ground. We can determine what the grade is of the product that's been sorted, and the quality and the characteristics of that. Because we got to make sure when we sell our ore to the Boleslaw Corporation in Poland that it meets certain specs. And we have a really good team here. Alan Buckley, who's the boss here, is actually in the center there. He's the gentleman in the yellow jacket in the center there. He's kind of talking to his team. Have people from all over the world. It's absolutely amazing to walk into a facility and see people from countries all over the place. There's Irish, absolutely, but there's people from other nations that work here all across the globe. Mining industry is truly a global industry, and Alan's built a fantastic team. Let's go to the next slide. By the way, this room, last time I saw it, was an absolute disaster. It was it was part of the old office building. And they had to basically shovel out all the ceiling tiles that had collapsed and start afresh. But it looks fantastic now. Did a great job. This is simply a mine plan. We spent some time looking at how they plan to mine the pillars and mine the stuff they're finding around, through drilling around the existing ore bodies. This is a big part of the whole scheme here. Is this going to work? Well, they have to know every single step they take day by day for the next few years. They have to plan it out meticulously so that they know exactly where they're going to pull ore from at any given time. Mining is very complicated, and anybody that would tell you different is lying. Okay, it requires extreme planning, extreme forethought, And it requires a certain element of gathering information, because there's a lot of times you don't really know the details of what's in the ground. You can't like magically see ahead of you. So you have to do things like drilling. And I'm going to talk more about that here in just a bit. If you go to the next slide, I think, sorry for the lag. This is really annoying. There we go. Okay. This image shows you the footprints of the deposit. What's that big brown square thing? That's actually the old tailings facility. Okay. That was here ages ago. It has been reclaimed. We're not looking to disturb that in any way, shape, or form. Okay. But what I'm showing with this image is the footprints of the ore bodies, and then you can see the little red polka dots here and there. Those are places where we're drilling holes right now, and we are hitting on all cylinders. We're actually drilling holes around some of that southern deposit down there. We also have a cluster of holes off to the side, which is a whole separate deposit. It's very interesting. We've actually found a new ore body already. Remember how I said lachine occurs with multiple deposits? We're starting to see that here. Let's go to the next slide. So, look, I'm not going to take you through a long series of geologic photographs, but I'm going to show you a montage here of core from this deposit. And, you know, a lot of people might look at this rock and think, geez, that's something only a mother could love. It's sphalerite, which is a zinc sulfide, is a rather interesting mineral. It's, in this case, it's kind of a light tannish brown. But boy, when you pick up that core, you can tell right away. You can feel it. It's very, very heavy. Okay, so most of that light tannish brown stuff that you see in those sticks of rock, that is super high grade, like probably 30, 40, 50% zinc. Okay, there is a little bit of galena in there, which is lead sulfide. That's kind of a silvery, brassy, or silvery metallic looking stuff. It's scattered in there too, but the lead grades are not all that high here. It's mostly a zinc deposit. Okay, and this rock is money rock. Okay, that is extremely high grade. It's just cool as heck to see brand new drill holes scattered all around the existing ore body. Almost all of them are turning up brand new discoveries of new ore. Okay, are we really looking at a 3.5 million ton deposit? I don't think so. I think by the time we get done drilling here, we might have multiples of that. Okay, I think this mine's going to have a long future, a very high grade production. All right, let's go to the next slide. So, with that, I think sorry, this lag is. Oh, yeah, one more photo. Sorry, this is our newest hire. His name is Johnny Talbot. And he's going to be the GM here. He's the general manager. He's going to oversee the operation. I really like Johnny. He's got experience all across Ireland. He's come back actually from working in Oman. He helped build and operate a copper gold mine in Oman, privately held copper gold mine in Oman. And now he's back home. So he actually is from this area. He worked at Galmo years ago, and he knows this deposit inside and out. Now, I think that's one of the keys to success, is having a team that has the familiarity with the ore body already. And we have it in Johnny. What's he showing us here? That is actually one of the first electrified mine lamps. He bought this thing recently, wanted to show me. That was built by Thomas Edison's company way back, I think, in the late 1800s. Okay, if you look back at mining history, you know, people use carbide lamps. Carbide lamps in coal mines tended to set fire to the methane, cause bad explosions. They asked Thomas Edison, "Can you build something better?" And he came up with the battery-powered and electrified headlamp that, you know, is more of a modern lamp. Of course, today we use LEDs and stuff like that, but these kind of lamps were used for well over 100 years in the mining industry, and this was basically the first rendition of that lamp. Right, quite cool. All right, let's go forward. Okay, so now I'm going to give you a few updates, and we're going to kind of skate through these because I realize I've been talking for a long time, blabbing on about Ireland. We're very excited about it, so it's hard not to, but I want to talk about a few updates. Snowline had some news a couple weeks ago. They hit 534 meters of 0.62 grams. You might say, well, gee, that's a bit low grade. Well, this is actually a very important drill hole in my view, because it's on the northeast side of the valley deposit. It basically is, in all respect, it is a significant step out in that direction. This hole is well outside of the block model, the current measured and indicated resource that they have that they're taking forward to production. What does it mean? Well, it means there's a lot of volume of rock here. Now, I'm going to put it in context. Okay, at Fort Knox in the early days, they started out with maybe 2 or 3 million ounces of reserves at just under a gram per ton. And then as time went on, the mine expanded, and the deposit, as it got away from the higher grade core, became lower and lower grade. Today, at Fort Knox, they're mining 0.35, 0.4 gram rock. Okay, well, this is very good grade. Okay, so the halo around Valley is actually proving to be very decent grade. And think about it, 534 meters. I mean, that's absolutely astounding. That's over a half a kilometer of rock. 0.62 gram, by the way, is like $85 in gold at current prices. What do I consider for an open pit? If you have $50, $55 rock, that's pretty good. This is $80, $85 rock. Okay, so this is very significant. It is on the north side of the resource area, and I think what they're seeing is a pretty big extension out into that part of the valley system. Not quite as high grade, but who cares? It's going to add a lot of tons, and it'll be a large inventory of gold that is added to the system. All right, let's go to the next slide. Now, there were a couple of things they showed in this news release that really caught my attention. First one, let's see, is it moving? There we go. This image shows you the pit outline, but it shows you where the hole is. Up there at the top is that 534 label, and it's pointing to the drill hole. And while it looks like this is within the pit, it's actually, because of its orientation, it kind of pierces down through the bottom of the pit. So it's like the bottom of the hole is way outside of the pit. Okay, so it is truly an extension. All right, don't forget about that stuff off to the east. Now, they did have one hole there off to the east with some long intervals, tens of meters, 100 and something meters of not huge grade, but certainly significant grades of gold. And that is a really interesting part of the system, because there's something going on over there. Have we seen the high grade yet? The higher grade? No, but don't hold I'd say hold your breath rather. There might be more happening there, and I think the company has a lot. I think they still have like 18,000 meters of drilling in for assay or something like this. So let's see what further numbers come along here. Let's go to the next slide. I think that this image in this next slide is really telling, because it kind of puts a context around the scale of the valley system. If you look at this long section up at the top, valley is way over there on the left, and this section goes all the way back to the northeast across Gracie. Okay, and don't forget Gracie. Yeah, we haven't heard about it for a while, but there's clear geophysical evidence. There's another intrusive down there. Yeah, it's a bit lower. It's probably a blind deposit once they find it. But look at this. They did nick some really interesting mineralization. There's a 53 meter intercept of 0.32 gram. There's 10 meters of 0.61 gram in that one drill hole. Is it an ore body? Is it a discovery? Well, no, but it looks a heck of a lot like what you would see around a discovery. All right. So I think that the company's starting to hone in on a new discovery over there at Gracie. And I think, they tried to drill there a couple of years ago. They hit some pops and whistles. Interesting. But I think this hole really sets itself apart. Part of the reason for that is because if you look at the photographs at the bottom there of the gold, how it occurs with the bismuth minerals and things, we're starting to see that kind of secret sauce of gold mineralization with bismuth tellurides starting to pick up there. All right. And I wouldn't be surprised if next year the company does some more drilling and they find, guess what, another deposit, maybe another valley hiding in plain sight. Right, but this gives you a sense of scale of these systems. Again, these almost always occur in clusters. Okay, let's go to the next slide. Now, let's talk about yet another tale in the Yukon. Where's the slide? Is it there? There we go. Sitka has a lot of these targets, these intrusives, that reduced intrusives across their property at Clear Creek. And we've watched them drill. Firstly, up at Blackjack, where they started out with low grade, ended up finding high grade at depth, and that's turned into a wonderful discovery. They're drilling down at Rosgobble too, Pokemon, and myriad other targets. But we don't want to forget that they also had another deposit up at the north end called Eiger. Okay, and the drill hole that's in this news release here is actually a drill hole from the Eiger system. It hit 0.75 gram over 121 meters. Now you might say, oh, that's kind of lowish grade, but again, don't forget, I mean, 0.75 grad is nearly $100 a ton in gold. In terms of current economics, that's wildly economic. Okay, so this is a good intercept. It's a classic reduced intrusion. And I think they're starting to see some sniffs of higher grades here at the property. And why do I say that? Well, let's go to the next image. If you look at where this hole is, it's actually one of the deeper holes underneath Eiger. And it kind of reminds me of where they were at with Blackjack about 2.5 or 3 years ago. All right, so hold on, the slide hasn't moved from there. We go. Okay, let's look at the plan view firstly. You can see Blackjack over here on the left-hand side. They did have some news out of the saddle zone, which is between Blackjack and Eiger. Over the summer, they had some really strong results there, and that I think is destined to expand as well. But Eiger's way over here on the right-hand side. And, it kind of got lost in the shuffle with all the news out of all the rest of the projects. But this recent drilling shows that there is higher grade mineralization starting to occur at depth. And we saw that at Blackjack back in, I think, mid 2023 is when they started to see some higher grades pop up. And that's actually when we took our first position, was when we saw the higher grade show up at Blackjack. Well, they're seeing it at Eiger. Let's look at the next image. And this shows you in cross-sectional view the Eiger deposit. It shows you where these drill holes are. Boy, this thing's lagging like son of a gun. Okay, they're deeper in the system. There's basically a whittle pit pulled on this deposit right now. So that's what you're seeing here, that blue kind of V-shaped thing. Notice these holes are below that. Okay, so they're showing that the deposit extends, but they're also showing the grades are picking up. Why is that important? Well, that's going back to the west. Okay, this is really interesting because if you think about this in the third dimension, what's to say this couldn't connect up with the saddle zone and in turn connect up with the Blackjack zone? In other words, I think all of this stuff is interconnected at depth. Does it mean we have a massive deposit? I don't know yet, but I do think there's a lot more going on. And when I see a company drill holes like this and see significant expansion of the system and increasing grade, that's telling them they have a vector to work with. I wouldn't be surprised if this turns into a lot more than we think it is. It's not going to be just the low-grade cloud that is currently perceived here. I think we have something interesting developing. All right, let's go to the next slide. Now, okay, we're going to kind of go through the Yukon stories here. Where's the next slide? Why is that not popping up? There we go. Oh, sorry. Somehow slides got shuffled around when I was making them. I had to do it in a rush because I got back late today. And for some reason, Goliath got shuffled up into the Yukon section. Apologies. I meant to break it out. In fact, I think I might have lost a couple slides for some reason. But here you can see some news out of Goliath. They have a lot of drill holes in the lab right now. 70 odd drill holes. I can't see the numbers there, but it's a substantial amount of drilling that's still in the assay lab. But every single news release they put out is just like a home run after home run. They hit these nice long intervals of what is likely ore grade mineralization over and over again. That's infilling the different stacked lodes that we have here at Sherbet. And what they're trying to show in this image in the lower right is the scope of this thing. I mean, this thing is absolutely huge. You can see the Sherbet system itself, which is in yellow. Can't quite read the numbers there, but it's like 1.2 kilometers or something, I think, down plunge. And now the Bonanza zone, the purple, is something like 1.2 odd kilometers along its strike as well. Absolutely huge gold system. As these infill holes come back, I think we're getting better and better resolution. Go to the next slide. We'll talk about it with a little bit closer view of these results. Okay, so in this image, you can see a close-up of the bonanza zone, and the little green tags are basically showing us where the assays are coming from. Well, that's interesting. I find the image at the bottom the most interesting. Why? Because in this image, they're looking down on this plan view, and now you can see the density of drilling that they have in that bonanza ledge there, or bonanza lode, and the consistent high grade values that they're hitting over and over and over again. Consistent high grade and thick intercepts that they have in the bonanza, and that's really starting to flesh that thing out. It's starting to define a lot of volume, a lot of what will likely be tonnage to this system. We have a lot of assays yet to come back, but man, just looking at that right now, I'm thinking, this, you can start to do some math around this and come up with some resource numbers. So it's looking very, very good. All right, let's go to the next slide. Now, again, I apologize because I think I meant to put this a bit lower, and I think I might have lost a couple slides. So anyway, go to the next one. I had to save things in a hurry. Okay. Back to the Yukon/Northwest Territories. Look, Rackla gave it, as they put it, they gave it a good go this year. Okay, unfortunately, so far results from the BITE, the bismuth tellurium bite target, have not paid off. Okay, I'm not going to read through the entire table other than to just say, you can see there's a lot of short pops and whistles here, a few meters here and there of gramish gold. Okay, so it wasn't a complete bust. There are discrete intervals of core that encountered gold. They also encountered a lot of bismuth. Well, we talked about that way back in the summer when they were drilling. There was bismuth minerals readily evident, bismuth and tellurium minerals readily evident in all of this core. In fact, there was quite a bit of veining in places, but the gold simply didn't materialize like we all hoped. Okay, they did have very strong numbers late last year. The drilling simply hasn't supported it. Why? I don't know. I would love to dig into this at some point and try to figure out why the surface expression of this thing seemed to be more consistent or more well behaved, like a traditional reduced intrusion, and the drilling didn't. Okay, now is there any shot in the heck that they're going to hit something? Well, let's look at the next side. I think of all the drills, and by the way, they got assays up through hole 8 now. I think they drilled 10 holes in total. And this image here shows you where those holes are. They're basically all on the south side of this giant hill. So they were drilling kind of in the scree slope and penetrating through the scree down into the bedrock below. You can see where holes 1 through 8 are. If there's one shot in the dark here, it's hole 10. If you look in the lower left there, that's hole 10. I would point out that the veining in that hole seems to be of a higher density. Okay, so maybe that's going to indicate we see a consistent long run. Maybe all of this other stuff they drilled to date was simply smoke around something else. I don't know. But right now, I'd say it's a stretch. I give it a minimal chance of being successful. Is it worth coming back? Look, I don't know. This is a gigantic reduced intrusion. It was just such a blatant target to drill. They drilled it. It didn't generate the results. Does it mean there's nothing here? Well, it's going to be a hard one to determine whether it's worth spending more money on. I think it's going to take some careful thought, maybe reviewing data, see if there's any vectors that emerge out of all of this drilling. Who knows? Maybe hole 10 delivers a long run of grade that saves the day. I don't know. Okay, but it is what it is. Things like this happen. We just gotta kind of move on. All right, let's go to the next slide. So there's another story that I think is really interesting, and we pushed this team, Richard in particular, to drill the Rye target at Trifecta. There were a number of targets that they had. They had Mount Hinton, which they spent most of the early part of the summer on, drilled some holes, didn't really come up with any home runs. And I got to say that's a challenging target. It's veins, it's kind of discontinuous veins, so it just looked to me like a difficult target. But they gave it their best, okay. But they did get over. They got the permit in hand, and they went over and drilled it rye, like we said. We agreed to put money in if they drilled it rye, and they did. Now, what did they hit? Well, they hit some interesting sheeted veins. Okay, we saw these photographs back in, I think, September that looked pretty darn interesting. Did it return, 100 plus meter intervals? No, but it did return some interesting mineralization. Here we got 37 meters, a little over a gram. Within that is about 15 meters of just under 2 grams, really. There is one high grade assay. There's a 0.5 something meter assay there. It's running 44 grams, I think it is. That's probably accounting for a fair bit of the gold, but nonetheless, it occurs with the sheeted veining. Okay, now they do have some holes yet to come back. Are all of them going to be mineralized? I don't think so. There was one or two that might be, and then there were some that were drilled in areas where it didn't look like the sheeted veining was so substantial. But that's not the point of the exercise. For a company like this to go out and test a brand new target, never seen a drill hole, and hit a pretty strong sniff like this, I consider interesting. I think this is a win. A lot of people, probably think, oh, gee, instant gratification. Well, discoveries often take a little time. If you think back to Snowline in 2021, they drilled some holes late in 2021 at Valley for the first time. In fact, it was on the edge of the Valley system. Were they absolute, home runs? No, they were, like tens of meters or maybe 100 plus meter of subgram to maybe low 1.x gram. Okay. But that was what pulled them back in. And then they drilled subsequent, and they drilled Valley more after those first initial holes returned some anomalous gold. And look at today, they got Valley. It's amazing. Okay. Is this maybe a similar story here? Well, they got the sheeted veins. So I think this looks darn interesting. Let's go to first of all, let's look at a plan view. Let's go to the next image and let's look at a plan view. The first thing that I think is really interesting about this, this particular drill hole, and why they decided to drill out here must have been from surface exposure, because they actually are not in the intrusion. If you look at this plan map, the intrusion is the big pink thing. Okay. Where's this hole? It's the one up at the north. Okay. So it's a ways out from the intrusion. It's in the schistose rock, the country rocks that are around the intrusion. Nonetheless, they saw sheeted veins. Now, they ended up jumping back down to the south there and drilling more proximal to the intrusion, but they didn't see so much sheeted veins in there. Like in their image here, you can see not so much, note about vein densities and stuff. But then late in the season, they actually went back up and they drilled another hole closer to this one that was reported in this news release. And we don't have assays for that one yet. I think it's hole 6 or something. I can't see. Anyway, that's yet to come back. So let's see what they hit in there. But right now, what I'm seeing is a vector that says, don't go to the intrusion to the south, keep going to the north. Okay, well, what does that mean? Well, look, you got to think in the third dimension in these systems sometimes, okay? While, yes, the pink in the south, there is the outcropping granite, who's to say there isn't another intrusion tucked up underneath there in the subsurface up in the north? And I think that's what's going on. A lot of that area is kind of covered by the glacial valley, so it's kind of obscured. But guys, look, when you hit 30 odd meters of over a gram, take it seriously. And yeah, it's going to be next summer before they can follow up on this, but that is a win in my book. Okay. They need to do more work here. Should more money be spent on this project? Absolutely. Okay. Get back out there and drill. All right. So we have to wait a few months, but who cares? Let's look at a detail of this thing. Okay. Let's go to the next image. And what I did here, they had a long kind of montage of all the core photos, and I had to kind of cut it into two pieces and put them side by side because they wouldn't fit on the slide. But you can see from this image that all of the intervals of core through that whole intercept carry gold. Okay. I can't read through the numbers. I can't even see the darn things, but the red numbers that you see there are the grades of all of those respective intercepts that make up the longer continuous run. And there's quite a few in there. So I think starting a little bit towards the bottom on the left side and carrying on over to the top of the right side, where the grades are 1 or 2 gram. Well, that's valley type grade. Okay, we have a taste of a valley type system here, albeit in the schistose rock. Don't know why it's hosted out there, but maybe we're in the roof of a system, maybe a little bit deeper below here, maybe a little bit further to the north, maybe who knows? I don't know, but that needs to be followed up. That looks really interesting. I'm going to probably end up buying more shares because I think this is looking kind of like snowline-ish, pattern of discovery with luck. We can't make any promises, but who knows? Maybe they have a big deposit there. Let's go to the next slide. So I'm getting towards the end here, and I think I realized something that happened because I had some slides, and when I think I overwrote them. Why is this lagging? Yes, I did. Darn it. I was moving over to Alaska, and I had 2 slides on tectonic, and they got axed. I apologize profusely. It's been a long day. It was very cold out there, and I think I just had a brain dead moment and unfortunately nuked them. But before I move on to Alaska, so let me just say tectonic had some very interesting results. I went over the story with the company before I left for Ireland a few days ago. We talked about the results in the news release, and they had, I think it was a few holes, like 5 holes from Chicken Mountain that were drilled earlier in the season. And they were pretty decent runs, but they were short holes. Okay. But they had nice long runs, tens of meters, in other words, of decent grade, 1+ gram in several of the holes. Some was sub-gram, but it was typical of Chicken Mountain. Okay, they were shorter holes that were drilled, I think, primarily RC drilling. This is where it gets interesting. They have quite a few deeper holes that they finished as part of their phase 2 drilling, which was later in the year. Okay, and that's what really caught my attention. All right, now I think it's very important that the guys at Tectonic find a larger high-grade core, kind of like I told you for Fort Knox. I think it's really critical that they find a couple million ounces, say at 2 grams. And I think you're starting to see it in some of those drill holes. That was really encouraging. I like the grades on those holes they released last week. But I also think that the drilling they have coming is going to show us a bit better about this kind of potential. Yeah, is there a 2 or 3 million ounce higher grade, say 1 gram per ton core to the system? We might actually see that in some of the drilling that's coming from these bigger holes that they drilled or deeper holes that they drilled. They just hang tight. I think there's a lot of interesting data coming out of Tectonic here shortly. They have some core images that they're going to be putting together, I guess, on a virtual core tour or something like that. I think before I cast any judgments, about what we might see, I want to see that core. But I think Tectonic looks very interesting. Apologize for losing the slides here. I think they got overwritten by the subsequent slides for some reason. But Tectonic is a reduced intrusive system. It's in Alaska. It's not in the Yukon like the rest of the ones I just talked about. But it looks darn interesting. Okay, Alaska Silver. This used to be called Western Alaska, as we know. The guys up here had a bit of a delayed season, and it was not because for lack of, for geologic reasons or, something that's gone wrong. It was mainly because they were working towards getting a U.S. listing. Okay, so they kind of reoriented the company. U.S. markets are basically where capital is coming from lately. And they wanted to kind of tap more into the U.S. Side of the investment world. It took a long time. I don't know why it took so darn long, but they finally got shifted over. And what it meant, though, is it meant they didn't have as much ammo to get out and do some work, but they did do some work. Okay, they did some really important work, and one of the things they came up with was the discovery of some very high grade surface samples and trenching, kind of in between. It was in between the Water Pump Creek area, which is off in the east, and the Illinois Creek area, which is a historic resource to the west. They actually found at surface some very high grade silver numbers that occur with galena, with lead and stuff, that for all the world looked like the stuff over at Water Pump Creek. Why is this important? Well, there's a big CRD system here, most likely. There's a big CRD system. That's the thesis we're working on. And this is the first evidence that there's more to the system beyond what they found so far at Water Pump Creek. So even though it's just surface samples for now, I think it's a telling indication there's a lot more exploration needs to be done here. They did drill some holes. I guess I must have read this too quickly or something, but they have a few holes. Sounds like they're in the lab. If they had hit anything big in these holes, I think they would have talked about them. So, did they, hit a home run like a couple of years ago? No, not yet. But the samples they see at surface tell us that the CRD is alive and well. And let's hope by next year they can get out there and drill this thing properly. Okay, so let's go to the next slide. Let's see. I think I've got a couple more. I try to cluster these around geography this time. So we got, where's the slide? Why is it not popping up? Boy, this is slow today. There we go. Silver 47. Okay. Silver 47 drilled quite a few holes at the Red Mountain Project, which is in central Alaska. This is a VMS system. Okay. So different. It's not a CRD. It's not, veins. This is a VMS, basically a silver zinc rich VMS system, volcanogenic massive sulfide system. And they hit some very high grades at both Dry Creek and then West Chunder Flat. So we're seeing some interesting results coming out of this program. I think they have a lot more assays to come back, lots more news to come in the next few months. But what does this drilling mean? Well, at both systems, they've actually managed to extend these things. Like at Dry Creek, I've been waiting for 3 or 4 years now, even since White Rock had the property, to see what was happening at depth. And finally, the guys have a drill intercept a bit deeper at Dry Creek. So let's take a look at this. I think this is the last image. All right. Apologies. Okay, it's going now. Nope. Where is it? Don't see it. My phone is giving up. Look, there we go. Okay, over here on the right-hand side, first of all, the Dry Creek VMS is outlined with the polygon there, but they've got some holes down deep, and then over here at the bottom of the cluster of holes on the right-hand side, they've got a pretty decent hit there. What is it, 1,200 and something gram per ton silver equivalent. I mean, that's phenomenal grade. Okay, so we're starting to see some high-grade shoots really take shape. How deep could this go? I think it could go a lot deeper. In fact, some of the deeper intercepts, that White Rock drilled a couple of years ago were pretty thick and indicated that the system was way open for expansion. So in my book, this is a good outcome. This is starting to look like it could host a substantial additional tonnage. If you can imagine the top bit there where all the cluster of holes is where the existing tonnage of the resource is, and then say, okay, well, maybe there's about the same amount at depth. We could see a double of the resource here, and I think that's very encouraging. Don't forget the company has a lot more targets. Not sure why they didn't test other targets this year. I hope they do next year. They got a whole lot of EMS targets, but at least we're seeing some expansion in Dry Creek. Okay, I think that's it, guys. I apologize for the lag and the technical issues. Just don't have the bandwidth, it looks like. But that's it for updates this week.
All right. Thank you, Quentin. So lots of good stuff going on across the portfolio, and I'm excited to hear that you were encouraged by the tectonic results there, Quentin. We're results assays still pending, but there should be a lot of assays still to come there over the next 2 weeks. And that the virtual Core Shack presentation that you mentioned, they did have that a few days ago, and the replay should be up now. If it's not, I would.
Apologies, I've been so darn busy, Kevin.
Yeah.
Just
their website, I think they have the replay up. If it's not, it should be any day now. And Rich Goldfarb was on there, and he I thought he said some pretty encouraging things. So I encourage you to go check that out. Anyway, if you're interested in learning more about our strategies, please do reach out to us. Reach out to Merrick. He's our head of investor relations. His contact information is right here. I think there is a lot of opportunity, like I said at the beginning, still in this market for bulls, for bears, a lot of things on the long side. This is a counter-cyclical rotational market, as we've been talking about, as Tavi just laid out in his slides, where there is opportunity in the commodity sector, primarily, including but not just the resource sector, not just oil and gas and mining and minerals, but also there's some other industries that we like too now on the long side. In healthcare, we've got a biotechnology theme within our macro and long short fund that's doing really well, as well as our oil and gas long oriented theme. Look at natural gas perking up here today. Even oil starting to pick up a little bit, and some of those stocks in our portfolio, which are the natural gas heavy E&P stocks, are really starting to perform. We're starting to get interested in financials. I think this is a market, like Tavi was saying, that's going to be a lot like the early 2000s, where it was really the tech and telecom sector coming down and the large cap stocks coming down. But it was a time to rotate long into commodities, into mining and minerals, into financials, industrials. And I think it's a very similar market. So there's long opportunities here. It's not just about the big short, but I do think there's a big short opportunity too. And I encourage you strongly to go to our website, check out our materials, and reach out to Merrick if you're interested in getting invested. We'll see you again in 2 weeks. Thank you.